Welcome to the Pyreswap show, everyone. This is the first Monday of our new schedule system. Monday, what we're going to call Macro Mondays. And the reason we're putting out this content is to kind of appeal to a larger viewer base and kind of provide more value that's been associated with me in the past, because I think that was really helpful for building, I guess, a larger audience, if that makes sense. And today, I'm going to be talking about macroeconomic analysis. And what I mean by that is I'm going to talk about global markets as a whole, and I guess you could say the major stuff that would be affecting it, if that makes sense. So first of all, let me just say good morning to whoever's in here in my audience today. Good morning, Dr. Mac. Good morning, Electronic. Good morning, Zero. Good morning, Dejanique. Good morning, Seabiscuit. Good morning, Zonic. Let's see, as people keep filing in, good morning. And if at the time right now, I only have Discord general chat still available as far as like what's being fed to me on screen for commentary. So if you are not watching on Discord general chat and you would like to write to me, I encourage you to join our Discord, which should be linked on every single platform we are streaming to. For today, I guess I can talk about how markets have rebounded last week from this global surge in volatility. So tech stocks in specific took a sharp hit, as they do. Bitcoin as well took a sharp hit kind of the week before. And there have been rebounds in tech stocks along with treasury bond curves as well. Along with Bitcoin. By the way, Bitcoin is up 17% on the week. Inflation for July is coming in on Wednesday. So we're not going to be talking about that today, but possibly at the end of Wednesday's show, if we end the Wednesday show at the exact minute that the CPI report comes out, as far as inflation goes, we can perhaps end Wednesday's show with the newest report on monthly inflation for July of 2024. Additionally, consumer prices are up 3% from the last 12 months. I want to make this clear, and this is something that I put out on Twitter, I guess an hour or so before this stream. We have really been in a recession since the middle of 2022. All of the traditional metrics for defining a recession were a go. They were clear. They were all green-lit, check-marked, that we were in a recession at the end of June in 2022. So as soon as Q2 of 2022 showed that there was 2 quarters of a contraction in real GDP, we were probably in a recession. Now, not every country was officially in a recession at this time. I want to say a lot of the ones that adhered to the laws of Islamic finance were able to at least defer their recession, for better or for worse. But the fact of the matter is that we've been in a recession for 2 years. I know that as the world and technology as a whole shifts towards this age of attention being the new oil, and we're in this much more vicious marketplace of ideas, for lack of a better word, it becomes easier to convince people of something, whether or not you can just get all of the correct people talking about it at the same time. You can convince people that something is true if you can organize it, making it look like a whole bunch of people are agreeing with the sentiment at the same time. If you look at economic news over the last 7 days, a lot of things will pop up if you do this on a search engine, and they'll talk about recession fears. They'll talk about recession fears based on the last week or two of market behavior. And again, there's no reason to be scared of a recession. You are in a recession. You have been in a recession for 2 years. I doubt that if I was looking at the last 2 years of anybody's life, people would think that they're not in a recession. Does anybody for the last 2 years think they haven't been in a recession? Yeah, has anybody for the last 2 years felt like they've been in something other than a recession? I would like to know this. I would like to actually get some feedback from this. Does anybody believe that the economy could go into a recession? Does anybody actually think about this? Do you guys believe in the numbers that you see, off of this fucking, 30,000 foot, not 30 million foot view, economic data versus the stuff in your own life? Like most people, the lived experience of most people doesn't work that way. Like they believe what's around them. So yeah. Yeah, thank you. Thank you. Yeah. I kind of agree. Like if I told you the last 24 months were in recession, like would you have trouble believing me there? You know, amazing gifts, everyone. Amazing gifts. Yeah. You're all doing so wonderful. Yes, we're definitely in a recession. I don't know. Now, the fact of the matter is that 2024 was forecasted. Yeah. 2024 was already forecasted to be a year of economic recovery. And there's been some forecasting as well that agree or disagree here. We've been in a recession for 2 years. Please ignore all recession fear narratives, okay? I don't think that you guys have to worry about your house getting flooded when your house is already flooded. Does that make sense to you guys? Do you guys get it? Like, it's already been tight. It's already been tight for the majority of people, right? The majority of people that are affected by global markets. So unless you happen to be like a self-sustaining like goat farmer in BFE, you've probably just been feeling the pinch of recession, okay? Obviously, I hope this is obvious. I hope that if you looked at the last 2 years, you would think, oh, this is a recession. The amount of economic problems that COVID caused were unprecedented. Like there was really like world-shattering reaction to this. Some for good, some for better, some for worse. I'm not here to nitpick what was good and what was bad. But like there was no way that the global economy as a whole could have been grinding to a halt. There was no way that that wasn't going to cause something like this. This could arguably be a lot worse, all things considered, to be clear. Like, this could be a lot worse. I know that some people may have lost their houses or their jobs or some degree of comfort or luxury, but it could still be worse. And, like, that is perhaps the silver lining to this cloud. Now, moving on from the talks about recession. So for today, on alternative.me, the fear and greed index for Bitcoin is extreme fear, rated about 25. Actually, I'll write this part down. And we're talking about Bitcoin's fear and greed index. Yeah, so we're about 25, which is extreme fear from alternative.me, and we're about 50 on CoinMarketCap, yeah, which they ring in as neutral. And this is a pretty good example of how narrative control can end up being the more dominating incentive, especially in markets like Web3. Because it's pretty bizarre that you would have one of these fear and greed indexes ringing in that extreme fear, 25, and another one being 50 neutral. Does that make sense to you guys? Yes, I appreciate the memes from everyone in chat. Thank you so much today. Let me look at these notifications. It's quite possible that... Yes, good morning, Zero. Good morning, Mr. Good Project. Good morning, Crypto Libster. Fantastic. Okay, so yeah, do you guys understand that, like, I'm not trying to point out that one of these institutions is corrupting slightly, but it does mean a lot when you're looking at data from multiple directions. And this is one of the things that is kind of like a problem with what I think data is as a whole in Web3, because if you're going to a single source for data, like they need to have an incentive to provide you correct data that suits your incentives and not their own. So right now, we're looking at an arguably significant difference between what the fear and greed index of CMC believes versus what the fear and greed index of alternative.me believes. Do you guys understand what I'm saying? Like, this difference is so high that you have to you have to step back from both of these for a minute and really think about, like, who's telling you the truth and to be honest, the truth here is kind of subjective because they're both using their own metrics. But you have to think about which one of these indexes aligns mostly with how you view the market, because that is what is going to kind of prove to be most useful for you. Okay. Bitcoin, again, is up 17% in the last week. Being up 17% in the last week kind of lends credence to the fact that CMC prefers it to be neutral. The fact that Bitcoin would be up 70% in the last week and then it's only neutral also says a lot about the Web3 user base as a whole. Does that make sense? Like, I don't know if I would describe this behavior as like spoiled, but if you're getting a 17% rally in a week, it is kind of bizarre that there are other things that would keep you in a state of extreme fear or being neutral. Now, I believe Bitcoin on the daily is actually dipped a little bit. We can look at that right here. Oh. Forgive me, I'm using the wrong computer for screen sharing. Okay, while I'm getting this one going, in the last 24 hours, Bitcoin is down 2%, but in the on the weekly, it's up 14.83%. Again, I'm not really sure if looking at this chart that I would feel one way or another. I think for whatever reason, people in crypto think a sideways market is bearish. Yeah. Like, that really does, wow. I guess you could say that really does leave a lot of money on the table for people who understand that the majority of the time the market is sideways, and that probably means that the majority of winners of opportunity come from a sideways market as well. That is an unfortunate truth. Yeah, that is unfortunately true. Okay, let me... Okay, I am going to go to CoinMarketCap, and you can in fact share my screen if you'd like, and we can look at an analysis of the Bitcoin chart. The circulating supply is 19.7 million, by the way. So, you know, Bitcoin circulating supply is extremely close to, I guess what you could say is its entire supply cap. 58,988, but like this right here is what, a daily chart? Again, yeah, it was 51,000 here roughly 7 days ago. Like this level of rebound is kind of unprecedented, and you know, it really just shows that the market kind of creates the user base. It's kind of weird. I look at like the human behavior in these markets, and people slowly get kind of like turned into chattel. I don't know how else to describe it. They kind of get turned into livestock about this. Like they just kind of get shepherded by, I guess, the behavior of the beast, the nature of the beast. And yeah, like I think that you need to be able to kind of be conscious of your own paradigm when viewing these things if you expect to kind of extract any type of advantage. Yeah. Yeah. 58,000. But again, when you look at the daily on the crypto chart, it just tends to look extremely volatile. It's like, yeah, like it just right here, for some reason, it's looking at 60,500, and this right here, this number, the thing that separates the red from the green, yeah. This displays ups and downs from when it opened, right? Now you got to think about this. Like, if you wanted to look at this one day here, and you can say like, oh wow, the entire chart is bearish, but the fact of the matter is that people in crypto, I think they tend to kind of gravitate either towards long-term holds or extremely high-frequent trading, right? And I don't mean like high frequency, like multiple times a second or multiple times a minute, but I feel like they kind of are entering and exiting trades every day. And one of the very interesting. One of the I think the advantages that crypto provides for the average person is that you can engage in day trading without an exchange, I guess, without an exchange monitoring you, or I guess you could say gatekeeping you for day trading based on FCC regulations, or I think it's maybe SEC regulations, but I think when you want to day trade stocks, there's like portfolio limits and stuff to make sure that they think you're eligible for day trading, to make sure that you have a certain amount of risk appetite. Moving on. I'm not really going to do like a TA analysis because I think of technical analysis in crypto as a Keynesian beauty contest of technical analysis. I will say this, that there's probably about 3 TA things that I think actually matter in crypto. I think everything else is nonsense. So I would say that, like, yeah. I would think that you should look at like lines of support and resistance. Now, what's interesting about support and resistance is how you can definitely see this during the fact that Bitcoin has just witnessed the largest inflation event in its lifetime. So Bitcoin's all-time high of, I guess, 2021, where it was 69,000. If you understand how the dollar's purchasing power has changed, yeah. If you understand how the purchasing power of the dollar has changed over the last few years, in order for you to really see a new all-time high, inflation corrected, here, I'll change the color for this. This would be about 79,000. So I know that Bitcoin, broke all-time high prior to the halving in Q1 and Q2 of 2024. Do you guys remember this? Fantastic. Well, the fact of the matter is that if you do really understand that, your dollar is worth less, the true all-time high would be 79,000 to beat, which Bitcoin has not done that yet. To be clear, I'm not saying this to sound bearish. I'm saying this to sound bullish, that you haven't actually entered crypto summer yet. Does that make sense? Like, crypto summer has still not truly started, because while you have in fact entered the halvening, you still always have that halvening bull trap, which we definitely saw. I certainly didn't change my sentiment based on the halvening. Yeah. The fact of the matter is that you have to go through that supply shock, that bull trap, and then you have to end up with a stochastic process, a stochastic inevitability that you'll end up where Bitcoin ends up undersold and overbought. And that is kind of what drives that's what creates the main wake, which you could call Bitcoin summer. Because Bitcoin is, I think, the largest rock in that pool, if that makes sense. Does everyone understand what I mean about 79,000 being the true inflation corrected all-time high to beat? Fantastic. Thank you so much for actually responding. I really appreciate when you guys actually answer questions. It makes me feel like I'm a real professor in a real classroom. Fantastic. Because I am. Okay, I'm going to erase this part right here. And the fact of the matter is, why did I bring up this all-time high? Support and resistance, you can see on Bitcoin's chart that the market revisits lines of support and resistance whether or not they realize that inflation has happened. Does that make sense? So the market has a memory, but most people are not really good at thinking about floating references. They prefer to think about fixed references. And that's why they think about dollar value and they think of the dollar having a static value. Something you'll learn about human behavior is that the rate of a change is even more important than the change itself. Because if something happens very quickly, as it would appear to a human understanding of the framing of time, this matters a lot more than the change itself. You can also boil a frog, and humans will not react to it at all. Does that make sense? Which is why people freak out when gas prices change a lot in a single year, but like they won't notice that their dollar loses maybe 10% of its value. There's also something else. There's also real inflation versus CPI inflation, and we'll not get over that now. But support and resistance. You'll notice that support and resistance on like the Bitcoin chart, and really any chart that is over a year or two old. I don't mean this for charts that are newer, because when we talk about support and resistance, we do mean we're referring to the price chart's history. Okay. Support and resistance keep showing up because it's one of the easiest things to analyze for in TA. Does that make sense? It is one of the most objective things to analyze for. If you go and look at chart history, you can find where strong resistance and strong support will be. It is from a lot of people analyzing for this that you can bet on it. Like support and resistance are things you can bet on. There is what you're really betting on is you're betting on the TA of everybody else in the market. I'm just being honest. It is a Keynesian beauty contest. Another thing that I would consider for Web3, as far as TA would go, would be Fibonacci retracement, I guess. But I guess you could say Fibonacci levels. Really anything that's covering Fibonacci. Generally speaking, the reason that I think Fibonacci is reasonable for TA is because Fibonacci happens without anybody thinking about it. Like Fibonacci is what happens when you plant a tree in the ground and then the tree grows. Fibonacci is what happens, again on price charts as well. Like there is a preference for life forms approaching things like Fibonacci. So the fact that there would be Fibonacci patterns on a price chart, if you understand that every actor on that price chart, whether or not it's a bot, is still subservient to a human actor at the end of the day, you're going to see Fibonacci retracement levels emerge and reemerge all over the place because it's just a pattern that appears commonly, ubiquitously throughout the universe. So therefore, seeing it on Bitcoin or seeing it on Ethereum or what have you is also probably a surefire bet. And I think the last one we actually already covered, is the Fear and Greed Index. I think the Fear and Greed Index, which arguably is also TA, is also probably, these are probably my big three as TA that isn't bullshit in Web3. Like, I think that the majority of other things, people are, you could say that they're participating in tasseography. They are, in fact, reading tea leaves. Just earlier today, I was looking at YouTube channels, and a lot of them featured astrology as a parallel theme to crypto analysis. Not saying astrology is fake, ladies. I would never imply something like that. But there's just a lot of astrology mixed in with crypto analysis. Why the hell not? Something like 37% of women read their daily horoscope. I mean, at a certain point, you end up in a Keynesian beauty contest of astrology too. Eventually, that's sort of why it works, I think. That's sort of why, you can reinforce that framing. But also, I think the fact that astrology is so popular reinforces the fact that the way that your perspective is formed does in fact affect your life. Because if you can allow your perspective and your perception to be shifted, you will in fact experience different results. So I think that's why astrology has this reinforcement, if that makes sense. It has a degree of, right? It has attrition, but it also has retention. Yeah, astrology has retention. Yeah. I appreciate that. Yeah. See, if you want to know something fun, phase 2 of Pyreswap incorporates two systems which are called portent systems. Reading it aloud for the rest of the viewers. C says, astrology might be fake, but it's damn fun. And he says we could suggest stars as visible fourth-dimensional beings. Okay, you know what? I'm not going to address what the second part means. If you know, you know. I'll tell you this. The phase 2 of Pyreswap has two systems, I should say 3 systems, and they are called portent systems. I'll just write that down here. And these portent systems are lunary and augury. And they have a product system actually, which is called the omen. And lunary and augury are yeah. We'll pull up a screenshot. We'll pull up lunary or pull up augury on the screenshot here. Yeah, you can screen share me if you want. Yep, exactly. Okay, so augury was a Greco-Roman religion practice of observing the behavior of birds to receive omens. So when the individual known as the augur read these signs, it was referred to as taking the auspices. Auspices means looking at birds. So when you ever hear the word auspicious, meaning like it's a sign of good fortune to come, they really mean that it's a sign of bird movement that implies good omens. Okay. Depending upon the birds, the auspices from the gods could be favorable or unfavorable. Sometimes politically motivated augurs would fabricate unfavorable auspices in order to delay certain state functions such as elections. Goodness gracious. I wonder if we all learned something today. Okay. All right. Anyways, could you also let me see a lunary. Thank you. That might work. Lunary. A lunary, also called a selenodromion or moon book, is a book of prognostication based on the position of the moon at any given time. It is an astrological genre with parallels as far back as the Akkadian literature. From the 2nd century AD, it is common in the Greco-Roman world. There are examples, blah, blah, blah. This was by far the most popular and widely circulated prognostic genre. And if you guys don't know what prognostic means, here, we'll just search Wikipedia right here. Prognostics. Oh, the likely development. We'll just describe it list. Prognostics is an engineering discipline that focuses on predicting the time at which something will perform its intended function. Just pointing that out there. Yeah, if you guys get what I'm saying. I think that perhaps there's missing a disambiguation here, but no big deal. If you guys understand, they just use lunary for forecasting. And yeah, so effectively speaking, for those of you who aren't aware, Pyreswap is a fantasy fiction GameFi megadApp. And we do in fact incorporate systems called lunary and augury, which are in fact systems that change based on the epoch. So every time the epoch cycles, the phase of the moon that we will be in and the type of bird that is being observed will change. So there are 8 different types of classic birds, and there are 8 different types of exotic birds. So I want to say that you have there's about 9 different rotations for the augury cycle, and 8 of them will be the, I guess you could say, common birds, and one of them will be one of the 8 exotic birds. These birds, as they turn up, they change the mechanics of the megadApp. They affect the megadApp in certain ways. Lunary is a 29 epoch cycle. 28 of them are in fact the common phases of the moon. So you'll have, for those of you who don't know, you'll have waxing crescent, waning crescent, waxing gibbous, waning gibbous, and you'll also have first quarter, half moon, final quarter. I don't remember the name they're called, and then full moon or new moon. I fucking don't remember. But anyways, the 29th one will also be I guess you could call it a exotic moon. Things like harvest moon, blood moon, eclipse, etc., etc. And yes, these will also affect the mechanics of the greater Pyreswap ecosystem. And yes, so the point being here is on top of this, through the combination of them, they can also create an omen. Omens have 4. There's very bad, bad, good, and very good. The omen system as a whole is nonsense. Really, the lunary and the augury as components, that actually determines what will happen. But we kind of summarize them in a fake system called the omen, which will kind of imply whether or not the user base is actually reacting to the underlying, to the artificial, or to the superficial. And let's be honest, we have some work to do before we get to phase 2, before we have a sophisticated enough user base to really appreciate the beauty of the system. But yeah, don't worry, it'll definitely happen. Yeah, but yeah, that's a great example of 37% of people, 37% of women look at their horoscope every day. Well, let's put it this way: there will be a obvious dashboard in the Pyreswap UI that talks about what phase of the moon Pyreswap is in, what bird is being observed, what is the auspice, and what the omen is. And people can choose to learn what these things do, or they can just react to what the omen says, right? It'll be interesting. Okay. Anyways, so we are up 70% in the last week, and for Bitcoin, and I want to talk about economic forecasting. So first of all, the International Monetary Fund predicted that 2023 would be a year of contraction, but 2024 would entail economic growth. And in contrast, JP Morgan forecasted headwind in 2024, citing payroll numbers slowing down and unemployment numbers upticking at the end of 2023. So I want to say that the majority of things that the Fed did were actually done about a year ago. If you look at what the Fed, if you look about what the current Fed funds rate, it's been about 5.5 for the last 12 months. We can actually pull that up too. Actually, we won't. But you've been about 5.5 for the last 12 months. I want to say around this time last year was when they stopped hiking rates. The average federal funds rate is about 4 or like 4.6, something like this. And to be clear, like this just means that central banks probably around the world are in kind of like a hyper-conservative state. And the whole goal here is to, in fact, repair the strength of the instrument, really just like bring inflation down. They've just been sitting here for 12 months. Arguably, like this should effectively eventually work. But the fact of the matter is, what you're waiting on to happen when you hold the federal funds rate at 5.5 for 12 months, what you're doing here is you're kind of betting on the stochastics of the underlying economy. And what I can talk about here is I can talk about what inflation is in the first place, and I guess maybe I could even draw a diagram of it. I don't think people do a good job at doing a diagram of inflation, but I think I could do that. First of all, the justified reason that central banks exist in the first place is okay, central banks' job in the first place is to keep trust and faith in the instrument, meaning that is there faith in the dollar or is there faith in the euro for the troika's sake? Well, Electronic, he was doing those 0.25 rate. Okay, for those of you who don't know, Electronic asked, why was the tiny 0.25 JCB, or do you mean ECB? Oh, do you mean Japan? Okay, yeah, it's probably because nobody else is hiking rates right now. Yeah, that's why. Does that make sense? Yeah, like, so the fact of the matter is, everyone else has been kind of like flat for the last 12 months, right? And Japan is hiking their rate. And the fact of the matter is, Electronic, what this implies is that all the other countries might need to go to a rate hike. Does that make sense? Because you basically say, like, you're saying, oh, this is happening in Japan. Could that spread here? Arguably speaking, like, that's not an unreasonable belief to have because there is an aspect of contagiousness in the market. And, yeah, does that make sense to you guys? That, like, when Japan, which is arguably a G20 economy, what have you, possibly a G7, I have no idea, needs to do a rate hike when none of the other G20 economies are kind of doing a rate hike, this implies that maybe Japan is facing a problem before other countries will. Like, Japan is going to face a country sooner that other ones might have in September, October, et cetera, et cetera. Does that make sense? Hoping that makes sense. Okay, so yes, and also Electronic, the yen was also performing really, really bad. And again, there is just a degree of non-fungibility between Japan's economy and every other country. Like, you know, every country is unique, and that's why it's hard to do like an A/B test of these things. Central bank's job is to keep trust and faith in the instrument, and they do that by keeping it nominally rigid, which again means stable, right? Nominal rigidity, which again, what you can think of as stability. Now, the fact of the matter is, in order for them to do this, the bank itself is balancing the amount of liquidity, or should I say circulating capital, it's balancing the amount, it's attempting to balance the growth of the economy with the supply. I don't know if that's visible. Is that visible? Yeah, okay. Right here at the bottom then. Okay, that's good to know. What this means is that they want the dollar to remain worth about what a dollar has been historically, at least in theory. They're since 1971, the Bretton Woods system has been suspended, and for better or for worse, they're not really limited by things like the collateralized amount of gold. And I mean, I guess you could say that there's a lot of guesswork involved with that job. But their job, at least as the description is, and I'm not talking about a dual mandate involving unemployment numbers, like that's kind of like, the dual mandate was actually added onto the central banks. The dual mandate was added onto the Fed's responsibilities after Bretton Woods was suspended. And I think that it's like one small ingredient in an absolute, in a banking system that is a abomination in the sight of God, to be honest. Like, it gets more and more convoluted about what banking is and what banking isn't. And I don't think that it really helps anybody. I don't think it helps anybody. Yeah, like I think that. Well, I'm not gonna get all ideological with you today. But anyways, yeah, the bank itself is balancing the growth of the economy with the supply. So what I mean by that, I'm gonna draw a diagram up here. I'm gonna draw. Actually, what I could draw, I got a better idea. I'm not gonna draw this at all. I'm gonna build this. Let me make sure I can actually balance this somewhere. Fantastic. Let's see. Is this mostly in sight? Mostly in sight? Okay. And I only need maybe 2 things today. What I will do is I'll keep some extra weights. Yeah, do you need me to move this so it can be centered? Yeah. Here, let me put it like that. Perfect. Okay. Fantastic. Okay, can everybody see this mostly? Okay, so I want you guys to understand something, and what I'm going to do is I'm going to draw a diagram of this anyway. That the money is not exactly wealth. Like, money does not equal wealth. Does that make sense? Money does not equal wealth. Rather, allegorically speaking, money is wealth's shadow. You can describe it as money being value's wake as well, if I were to imply it more poetically. So generally speaking here, what I'll do is I'll put a W over here, and I'll put a dollar sign, the S with the vertical slash through it over here. And by the way, the S with the slash through it comes from the fact that we use the Spanish real in the colonial era of the United States. It was one of the circulating currencies. We had four. I think it was like, I think we had the Great British Pound. We had the French one, the Spanish one, and I want to say the Portuguese one, or even like a more derivative one. I can't remember. But yeah, we have a balance of the amount of money in the system and the amount of wealth. So the fact of the matter is that when coronavirus was happening, they were doing this. I'm gonna say this one is money, and this one's wealth. They were in fact locking down businesses. They were locking down businesses, and they were also stimulating the money. So they were literally pulling from this one and adding to this one. I hope you can see on my screen how off tilt this is now. Does that make sense? They were pulling from this one. They were pulling, when they were shutting businesses down, they were removing the amount of valuable things in the economy. Whether that was restaurant visits or, I don't even know, movie theaters, like whatever the service economy was doing, where people are actually going outside their house. Since all of those businesses were curtailed, the amount of things you could buy with $1, right? Like if you are in a government shutdown and you have money, let's say you're working from home as a programmer or whatever. If you're working from home and you're getting paid the same, well, the fact of the matter is that you can't do as many things as you used to be able to do with that dollar. Does that make sense? So the fact of the matter is the power of the dollar that you're getting paid with is diminished because there isn't as many things that you're allowed to do. Like your total economic freedom has been reduced because business owners in your local area, they're not allowed to run their business, right? So later on top of this, what was happening, instead of these things kind of being diagnosed case by case, and I guess some of them were, what they did was they figured out what we're going to do to offset this is we're going to send out a bunch of stimulus checks. So on top of that, not only did they remove the amount of things, that reduced the amount of things you could buy with $1, they also increased the amount of dollars in circulation. So you end up with a fucking balance that looks like this. I mean, this is literally like a 45-degree angle. Like it went from like literally being like a perfectly parallel with the ground thing, and now it is arguably halfway to being vertical. Do you guys see this? Do you guys see this? Yeah. Like literally, like if I pull, yeah. Okay, you guys do see it? Fantastic. Literally, I think if I pull this one, I put it over here, the whole thing balances. Yeah. Yeah. So they literally reduced the amount of wealth, and then you can see that that's almost like 1/8 or so, maybe 1/6. That's hard to say them on the math. And then they added it over here, which has caused this amount of imbalance in the economy. So in order for the Fed to effectively reduce inflation, they need to get this line, this beam, back to being horizontal. I hope I'm making sense to you guys. So what do they end up doing? They end up raising the rates. The Fed has three major things it can do to kind of affect the market. These involve the interest rate, the reserve rate, and open market operations. Interest rate and reserve rate kind of basically do the same thing. What they do is they're limiting the amount of capital that banks can lend out. So banks in general engage in lending known as reserve lending, right? And the majority of banks, by the way, if you've heard about fractional reserve lending, it's one of these things that is very, very misconstrued. Arguably speaking, this is the way that the majority of banks, I think the only banks that are not permitted to engage in this, I think are the ones beholden to Islamic finance. But I think the fact of the matter is that is a topic for another day. But the point being is, since all that time went by, and the economy was effectively kneecapped, it now needs to figure out how to recover from that. Does that make sense? Like there's now needs for these things to be reintroduced into economy where now everybody got paid to do nothing, right? Like nobody had to really work for that money. So the fact of the matter is that this money ended up getting used, but there wasn't any work being done on the other side. Like all they did was just increase the amount of money in circulation. And if you increase the amount of money in circulation and you're not balancing it by there being more things that dollar would be divided among, that dollar's value is going to go down, because that is why we call it inflation. Like the dollar is inflating because it's being filled with it's like a balloon, right? Does that make sense? The balloon's mass doesn't increase if you increase its size. Does that make sense? That's why I'm pretty sure that's why they call it inflation. Like you're making it larger, but you're not actually making it bigger. I don't know if this makes sense. You're increasing its size, you're not increasing its mass. I hope that makes sense. That's an allegory or a metaphor. But so over here, the amount of wealth in the economy has been curtailed, and over here the amount of supply, the amount of money supply has been increased. Well, Jerome and Lagarde over at the Troika, what they do is they decrease now the amount of dollars in circulation, because what they're trying to do is they're trying to decrease the amount of instruments in circulation to the point that value and wealth can get caught back up, and we can return to a horizontal bar, a horizontal beam. The problem with this is that there's so many moving parts to an economy. There is a significant amount of guesswork involved. And the problem with economic forecasts is that as soon as you make an economic forecast and you distribute this economic forecast far and wide, it kind of becomes self-invalidating. The government tends to be aware that when the economy is left alone, in theory it will grow, because people will end up solving their own problems, and therefore they'll end up creating value from the derivative. It'll just happen stochastically. It'll happen as if it's done by random. That's great that they at least have this type of outlook in theory. But if you listen to a lot of the press conferences that were happening in 2023, what was being implied was that the government needed to spend and invest its tax revenue in a certain way that would kind of generate the growth of the economy. Now, the problem with public spending is that you can throw money at anything and then pretend it's growing. We have this problem in Web3 as well. Does that make sense to you guys? Like, you can throw money at trash and people will think it's not trash. Do you guys understand this? Like, can I get an actual affirmative here? That if money is thrown at trash and that trash goes up, people think that this is not trash, right? So you understand that, like, this is effectively the, you could almost argue that the government itself is invested in people's sentiment more so than their actual situation. Because similarly to astrology, if people feel bullish things will happen. I don't know how else to describe that. Yeah, if people feel bullish, their perspective will change their results. I hope this makes sense to everybody. And I think we've done pretty good for Macro Monday. I want to describe this also implies that Web3 as a whole, and by the way, I'm bringing it home to Pyreswap now. There's huge explosions of wealth in Web3 when there are paradigm shifts, when there are new ways of looking at things, and when new things can become invented. I don't want to use NFTs as an example because that was, I think, arguably an interesting event in history. But yeah, the fact of the matter is yeah, and we don't even need to look at this right now. But the fact of the matter is that one of the most important things to kind of create these chain reactions is that ideas need to be spread. Yeah, and that is the purpose of the Pyreswap show, by the way, because Pyreswap is an actual dApp that has invented and innovated and expanded the paradigm of ways to think about wealth, value, and money inside Web3. And if this is your first time watching the show, we encourage you to come to our Discord. By the way, the Pyreswap show is brought to you by Pocket. And I am going to now open the floor for questions if anyone has them. I can answer any question about anything. I guess I can also announce that that recruiting for the 100'xer Circus Troop is open, and to everyone who has sent me a message about it, that's appreciated. I'm going to get back to all of you. We are going to really emphasize. I mean, it's kind of obvious. The power of teamwork has really been instrumental in the 100'xer Circus's history, and we have extremely big things coming pertaining to really, I guess you could say, leveraging that to the maximum. I really want to just voice my appreciation to the dozens of people that have been helping me without even needing to be asked. And yeah, I mean, like, if there's anything I'm bullish about, it's bullish with the community that this project has and the people that I am honored to call teammates. And yeah, we're gonna change Web3. We're gonna change DeFi for sure. We might just change banking as a whole. And we're definitely going to create applications for these primitives that people keep kind of stumbling across in Web3 and they don't know how to do anything with them. Yeah. Yeah, Electronic, it does mean we're all going to make it. We're all going to make it. Yeah. We're all going to make it. Well, Electronic, I would say the people that are going to make it are the people that put an effort into at least understanding what Pyreswap has to offer Web3. Yeah. The other people, I think that what they might do is what I think Albert Einstein called the definition of insanity, where they just keep taking their paycheck and shot putting it at the next meme coin because they think, one of these, I got to hit a home run. If I just keep swinging, eventually it'll work. But the fact of the matter is that, yeah, I don't know if that's the case. The market tends to saturate. The market tends to lose its faith in things that the majority of people aren't making money on. Yeah. People continue to put faith in things where they feel like they had a potential exit in the future. Like they were close to making money. Like they were up at one point. So therefore, they need to get after it again. Does that make sense? A lot of people think that they need to bet on meme coins because they were up a lot at one point, and all they gotta do is get back to that same point and then act differently. But the fact of the matter is that's how everyone else is thinking. So everybody is now getting less and less bullish on the next meme coin, which is in fact just squeezing the opportunity out from everybody else, because everybody is in the same herd getting pushed into the slaughterhouse. Yeah. Also, I want to talk about how meme coin launches pretend that they're up 17,000% in 24 hours. So the first thing they do, yeah, how to make trash look valuable. Let's finish it off like this. The first thing they can do is they can deploy $1 of liquidity. Then they make $1 buy. Yeah. Then they deploy another $1 of liquidity. Then they make a $2 buy. All they gotta do is have a bot do this sequence 10 times in a row in under 5 minutes. Does that make sense? And they're just mooning the shit out of their chart. Does that make sense? Because they're also jacking up the volume. And then at a certain point, they deepen the liquidity to a few $1,000s, and they let a bunch of army of volume bots go after it, and they start trading it. Does that make sense? And then it'll look like it's up 5,000% in the last 6 hours, and then it'll just be swarmed with volume. So by the time it starts trending, meaning by the time they pay Dex Screener for enhanced token info, you, the dumbass, feel FOMO and take your mortgage payment and shot put it at a piece of garbage. I'm just hoping that rings true to 0 people watching this stream. I'm hoping that 0 people watching this stream have fallen victim to this fucking scheme. But I know it's not true. But I think at least with meme coins, they're at least being more and more honest. There's absolutely nothing there. But it also shows that the majority of people care most about money. So I guess it kind of shows why casinos tend to make their most money not in the high roller tables, to put it that way. Yeah, casinos don't make their money in the high roller tables. Yeah, electronic, yeah, like we deal with it through the same strategies before. Yeah, we increase the user base. Yeah, like literally, yeah, and that's not even macro as much as micro. Yeah, but yeah, we just increase the user base. Yeah, increasing the user base is the solution. Yeah, whether the price is, again, we could be up at 0.50 and the solution would be increasing the user base. We could also be 10 times lower and the solution would be increase the user base. There is no solution, there is nothing to think about other than increase user base. Yeah. Yeah. Alessio, to answer your question, that is also when the user base is increased. In fact, the goal here, we want to use Dunbar's number. Again, I'm going to write this out. Enough people need to feel. Does anyone know the rest of this? Need to feel that enough people feel there's enough people. Now the fact of the matter is, the best way to create this is to increase the user base of the IWV to multiple hundreds of daily players. Because I don't know if you guys have noticed this, there's a lot of people who are able to wrap their brain around the farms, but the concept of active staking is just beyond them. Does that make sense? There's a lot of people who can understand the need to buy a coin, but to do anything else with it is just beyond them. Does that make sense? So the fact of the matter is, we need to increase the smallest amount of people that are the most fundamental to retention. Does that make sense? If I were to display that marketing funnel again, we need the bottom of the funnel to be large enough so that to the fact that the largeness of the bottom of the funnel implies a largeness of the top. And therefore, when there's a lot of people who are aware of the token, does that make sense? And then a lot of people who understand fundamentally the token's value, this right here, I guess I'm not drawing anything, but the bottom of the marketing funnel effectively can catalyze a chain reaction that drives the rest of the moving pieces all the way to the top. So there's only one objective for the entire Genesis. It is to increase the size of the active staking user base. None of this project works. Yeah, none of the project works if we don't create the witch game. So like if you're wondering why something is going wrong, it's like the witch game is not finished. Yeah, the witch game is not, yeah, like literally it is the only problem. So like whether charts go up or down is irrelevant. The witch game user base needs to be increased. Yeah, it's the only, yeah. Again, going back to this diagram, in order to create a purpose for the price going up, it's the same concept. We're building Tarazu. It is the same concept. It is the most ancient financial instrument. Does that make sense? Here we have the night game. And here we have the witch game. In order to make the night game go up, and we could even pull this thing here to describe how asymmetrical they are. In order for this thing right here to stop being tilted like this, we need to increase the amount of weight over here. Or should I say, we need to increase the amount of weight over here if this one's the witch game. We need to increase the amount of weight over here. If you want the night game to go up, which is again, prices rising upwards, right? Because if you guys are thinking about the price of things going up, you're playing the night game in your head. Does that make sense? Yeah, because the witch game doesn't give a shit what the price is. Does that make sense? And I know that's crazy. Like, I know that's crazy, but that's the whole point of this. We need to increase the weight of the witch game. If you guys, you know, you can see this meme right here in the general chat. 100'xer is the way. 100'xer was a $500 million project at its peak. Does that make sense? I have great news for you. Pyreswap does not need to be a $500 million project in order to start repairing the damage that needs to be repaired with 100'xer. Does that make sense? In fact, its total supply is already rivaling 2 ohms, I understand. But the fact of the matter is, the witch game, the amount of participants in it needs to go up. Because I don't know if you guys noticed this, the witch game has a very high retention rate. In fact, its retention rate gets higher the higher the amount of people playing it too. Did you guys know that? Like, the retention rate goes up with its population. So literally, increasing this solves all the problems. All of your problems, all of my problems, all of DeFi's problems. Yeah, increase the witch game. Yes. Imagine this. The world will end on January 1st, 2025. But the way we can stop it is by increasing the witch game. Like, the user base for the witch game needs to be increased. Like, we are trying, I guess you could say, we're leveling up all of our marketing, all of our content creation. By the way, I don't know if you guys noticed, we're streaming this Pyreswap show 6 times a week. Very high production, by the way. Very high production. And we're only leveling these things up. But unfortunately, we have a problem, which is the fact that this is not a fork of garbage that everyone else is already familiar with. Does that make sense? Like, so you have to effectively capture the amount of people that are smart enough to figure out that meme coins are not the way. Does that make sense? So the fact of the matter is, all of Web3 is working against us. Because Web3 is filled with people who don't know what they're talking about, but their ego prevents them from actually addressing that they don't know what they're talking about. And then what they do is they copy off of somebody else who they think sounds confident. And what they do is they superficially emulate the way that that person talks about things. And therefore they think that they are also knowledgeable. So you have like a significantly large problem that effectively Pyreswap needs to, I guess, penetrate through and effectively capture the few that are savable. Yeah. I'm hoping this makes sense. By the way, you know, I don't want to get all religious with you guys. In the New Testament, Jesus tells a parable called Parable of the Sower. And this is a parable where he describes mustard seed that gets scattered in 4 different scenarios. 4 different scenarios. Does that make sense? Mustard seed gets scattered in 4 different scenarios. I think one of them is like the road, and like it just never lives. Does that make sense? It's like 0, right? Then he has some that are like, I guess, on among the thorns. Yeah, the thorns, these are the ones that are eliminated by adversity. Yeah, like adversity chokes them. Then he has ones that birds eat. And the birds are the ones who are tempted by the devil, and effectively they get tempted elsewhere. Does that make sense? Zero, yeah, like death. Does that make sense? They never live in the first place. And then the ones that are like good ground, these ones go 100x. By the way, did you know there's a 100x in the Bible? Did you guys know there's a 100x in the Bible? Yeah, it happens to be when Jesus talks about the parable of the sower. And it's literally in, pull up parable of the sower. Yeah, pull it up. Yeah, where is it? Where is it? Yeah, I'm going to highlight it. Okay, there we go. Yeah, okay, highlighting, screen share. That same day, Jesus went out into the house and sat by the lake. Such large crowds gathered around him that he got into a boat. Then he told them many things in parables, saying, a farmer went out to sow his seed. As he was scattering the seed, some fell along the path, and the birds came and ate it up, right? Some fell on rocky places where it did not have much soil. So right here, the road, actually, no, this is right here is actually not thorns, but among the rocks. My apologies. Yeah, these are the birds. Sorry. Birds and these are rocks. This is a hard parable to have from memory. But the point being here is the birds come and they eat them up. There's nothing there. Some fell among rocky places where it didn't have much soil. Now it sprang up. Does that make sense? Because the soil was shallow, right? But when the sun came up, the plants were scorched and they were withered because they had no root. And then others fell among thorns, which apparently they were choked out by adversity. But then some fell on good ground and they went 100x. Like, does that make sense? So the fact of the matter is, the people who can get all the way through this, I need you to understand, when we're building a marketing funnel, do you know what Jesus was talking about here? He was talking about marketing. Yeah, Jesus is literally talking about marketing. So he's describing that when you're evangelizing things, you're going to tell the word of God. That's the business Jesus was in. That some people, they're not going to listen to you at all. He says that some people, they're going to adopt it quickly, but when adversity comes, they're just going to be fucking knocked off their horse. Does that make sense? They're going to be like, oh, this is harder than I thought, and I'm going to quit. And then other ones, it takes root, but then they get tempted elsewhere. They literally just get distracted. They're like, you know what? They got a surge, but then you know what? They didn't have anything. So Jesus is just talking about marketing. He's literally just talking about marketing. I'm not joking. So the fact of the matter is, when you have a marketing funnel like this, these are the ones that don't 100x. It's the ones that retention will 100x. That is literally the word of the Messiah. Does that make sense? It is not these ones that 100x. It's the ones at the bottom that will 100x. So if you guys understand, we need to increase the user base of the IWV. I don't know how I can make this any better. Yeah, I guess I can quote Jesus. I already did that. That's pretty crazy. But yes, this one is the 100x. So we need to increase the user base of the people that are regularly playing the IWV. Now, some people that are in these categories, maybe they've already played the IWV once or twice, but believe it or not, they'll actually get pushed back down into the bottom when we increase the amount of people coming in the top. Does that make sense? Because a lot of people listening to this right now, they didn't play the IWV today. Myself included. I was busy researching macro, right? I was busy doing research for Macro Monday. But the fact of the matter is, literally, they get drove back into it when they feel like it's more lucrative. They might even have an advantage over the newbies coming in after them because they practiced a few times back in June. Okay? I hope that makes sense to you guys. Yeah, literally, if you want the people that will stick. Does that make sense? When we market, we're always going to have people that show up. For instance, on the AVAX Talk prize, right? Some people show up, they get $10, and they never play the IWV. Have you guys noticed that? Some people showed up for $10, and they for 20 more dollars, all you gotta do is go get 1% yield on the epoch, right? And they're like, wow, and then you get 20 more dollars and do it again, and they don't. They just get punched in the fucking stomach, and they bend over, and they, goodbye. Does that make sense? Yeah, which is crazy because they are accepting $10 as what it takes to debase them. Does that make sense? Because for those of you who are long-term bullish on this project, you guys understand the potential of the Incarnation Witch Vault. You guys understand the potential of active staking. So I couldn't pay you $10 to quit. Does that make sense? I couldn't pay any of you guys $10 in Pyre AVAX to never come back. Does that make sense? Right? It's impossible for me to unconvert you. Does that make sense? Do you guys get it? It's impossible for me to unconvert you because you have now had the eureka moment where it all lines up in your head. Does that make sense? So the fact of the matter is, we just need a few hundred of people like that. Which, by the way, we're already making progress on that regularly. Yeah, it is. We continue to move the needle there. So it's a finite amount of work we have in front of us. The fact that Genesis is 6 months long, electronic, that might be perfect. Does that make sense? Because believe it or not, it's kind of sad that the Genesis itself is not drawing the hype that a Genesis event used to. And I blame that on the fact that people ruin that by being shitty at the execution of that. Does that make sense? That is another tool that was useful to the previous generation, which is now no longer useful because so much distrust has been built in this tactic. But you guys are, yeah, exactly, that too. Tomb forks, DEXs, and DEX Genesis events. These have reputational problems. So we have to fight against all that. I have great news for you guys who are in Genesis and are worried about downtrends on your chart. You're still getting paid in the highest real yield token in DeFi. To be clear, you're still getting paid in that, whether that's the price you want it to be or not. You're still getting paid that every day that goes by. I know for a fact you've been in Genesis events that cannot make that claim. Okay, I'm going to end Macro Monday here. I think it was great today. Did you guys like it? Yeah, I think we did a great job today. I want to thank you guys, anyone watching on Twitch, anyone watching on Kick, YouTube, whatever the fuck else we're on. Thank you so much for coming to the Pyreswap show, and have a great rest of your day.